Welcome to June Market Update. Today we are speaking about the sales statistics from the month of May. When reviewing data that has been released about the sales activities for a greater Calgary region, the numbers as a whole don't show well. The impact of COVID-19 on a housing market has been extreme, as it has on the entire economy. However, as I mentioned in last month's update about the difficulties we had in April, the monthly summary figures don't tell the full story. They tell the story, but not the one I'm going to focus on my update today. We will review three major market elements: the sales summary, inventory story, and market picture. Also, I'm going to provide my advice to our buyers, sellers, and investors. So let's talk about the sales summary. The total sales were down 44% from the same time last year. The apartment segment was affected the most with a 56% decline, and attached homes showed the lowest decline of a minus 35%. This is a significant rebound where we finish in April, but still remains a long way from normal. This is where I conducted my own analysis. The month-over-month numbers don't tell us enough about the real trend happening. The month of May was very different at the beginning of the month and very tended. In the first part of May, the sales were the result of the buyers and sellers activities in the last part of April. This was prior to April 30th announcement of the reopening plan. Even though the reopening wasn't scheduled until the middle of May, new optimism did have an impact on our housing figures. Towards the middle of May, we were able to see a real impact of this, and we have data to tell us the tale of two entirely separate markets. The good news is that May transitioned from virtual standstill to a typical spring-like activity. In terms of daily sales, the May started out slow, but showed impressive figures from the 20th onwards. When we compare weekly sales figure with the same period 2019, we were off pace for about 55% at the beginning of the month, but closes the gap to about 25% by the end of the month. That is a significant shift. As we look to understand our real estate market, I look closer than a simple review of a cold monthly figures. We also must look at the leading sales indicators, which are pending deals and showings. At the beginning of May, we were still seeing a huge reduction of number of showings comparing to 2019. But at the end of May, we were only 15% away from where we were at the same time last year. That was a significant and healthy rebound that provided an optimism to the home sellers. The second indicator of sales are pending deals. Those are the deals that are under contract between buyers and sellers. These numbers generally turn into a firm deals 10 to 15 days later. It is an early indicator of a true sales happening. At the beginning of the month, we were seeing new deals being written are way behind what we are accustomed to in May, to the tune of 45% less deals. As the month marched on, the still was building up, and by the end of the May, we have seen only 7% less deals made. Needless to say, this will have a huge impact on real sales continue to grow. With the continued trends towards 0% gap or even 10 to 15% pace of the last year, this must be considered as a win for the hopes of Calgarians. Well, it's time to give an inventory story. As we discussed in April's update, there has been a significant shift in inventory numbers in terms of both total inventory and new inventory coming to market. We finished the month with 5,813 homes, which is about 22% less than last year, or about 1,650 homes less. The COVID has been a full reset on inventory. Usually in May we would see 100 to 115 new listings coming on the market every day, but we averaged only about 80. Unlike the sales summary, the inventory numbers were very consistent throughout the May, with an increase at the end of the month. As the month went on and we compare a full week versus the same time last year, the number of new listings hitting the market went from -30 to the same level as last year. At the time of writing this update, we have already seen more listings coming on the market in a few days in a row than at the same time last year. It is quite a shift and it is happening fast. And my hope is that we will not see a prolonged spike in new inventory, as that could have a negative impact on our prices due to still trailing number of sales. Time will tell. So let's talk about what really matters the most. Pricing picture. We watch two things when it comes to pricing. How we did month over month, that shows us our current micro trends, but also how we did year over year. There has been a lot of fear that house prices will fall. But watching the news and knowing what we're going through, it is easy to expect that house prices will have some decline. As I write this report, RBC, CMHC and other big firms have been reviewing their lending guidelines, and reports being released look at some double-digit declines. These things haven't eased any worry to greater Calgarians. Month over month, we saw our benchmark price go from 415,800 to 411,600. To add a little bit of perspective, January has us at 415,000, then again 450,000 in February. March had us at 417,000. Despite of everything, we are just sitting at about 5,000 of the beginning of the year, which is not significant. Year over year, we are minus 2.67% from the end of May 2019. A dollar loss is a dollar loss, so it is not ideal. But under the current circumstances, it could have been worse. So here is my advice for buyers. The market might take you by surprise. We wouldn't have expected that in the middle of a global meltdown and pandemics, there would be much pressure on the buyers as we come out of it. However, there actually is. While inventory levels remain low comparing to few last years, and pent-up demand is resulting in multiple offers. The homes that provide a good value and are priced fairly don't sit on the market too long. An overpriced home is still an overpriced home, and there is no need for you to pay more than the market value. The high end of the market continues to get the highest deals, but mid-range still gets 3 to 3.5 of the listing price. Last month I predicted a pinch in inventory at the market that could almost feel as a seller's market. Did this happen? And many sellers in May were very happy with the results. I have already started to see a shift away from our best selling market this year. The average number of new listings coming on the market from May 1st to May 21st was 75 listings a day. But in the last 10 days, it jumped to 95 listings per day. As I write this, our last 7 days have seen an average of 113 listings a day, with some days even reaching 130 new listings. The rush of new listings is coming, and it will reshape our inventory picture. If you want to achieve the best price of the year, now is your time. In June, maybe July, and that's it. After that, I believe that inventory will likely get too high to follow the pace of sale. And remember, the pace of sale will not likely rise to the number of new inventory coming on the market, which is going to result in a negative down pressure on the prices. So take the advantage of this small window of pent-up demand and price extremely fair. Here is my advice for investors. I have been asked questions: should I wait for the price drop? Is this the right time to buy? Is there going to be a spike in a foreclosures because of all of this. My advice for investors is really backed on their personal motivation. First of all, timing the market is very difficult. Easy in a real estate market than in a stock market. However, there is so much conflicting information out there and so many different point of views. Value buyers who purchase flips, your offer might hit motivated sellers. There are people starting to look ahead of their financial situation as government support expires, and they might take the action today. We can't know what winter months are going to look like, but there is a reasonable window for buying and selling, and winter might be tough. If you're selling back to market in winter, make sure what you buy right. The cash flow buyers, the price is not everything. It is more about overall health of the economy and finding the right tenant. If the right property hits and you have to pay 5 to 20k than what you originally wanted, but the property is fantastic for your portfolio, don't sweat it, get it. With a low inventory, there might not be the home coming on the market that checks off all of the boxes. And that is it, folks. Thank you for your attention, especially if you have got this far. I hope this provides you with a value and a different view than what you have read in the headlines. And don't forget to subscribe to my channel. Thank you.